Euro to US dollar holds near 3-month lows, weighed down by a risk-off sentiment. The pair has been on a downward trend, with attempts to recover short-lived. The US dollar's surge, following a hawkish cut by the Federal Reserve last week, has contributed to the euro's decline. This is despite the US dollar's continued strength, even in the face of downbeat manufacturing activity data in the United States. The October ISM Manufacturing Purchasing Managers Index, PMI, showed a contraction in the sector's economic activity for the 8th consecutive month, highlighting low employment levels and a decline in orders. The Federal Reserve's policymakers remain divided on the path forward. While some, like San Francisco Fed President Mary Daly and Chicago Fed President Austin Goolsbee, take a cautious approach, others, like Governor Stephen Miran, believe the current policy is too restrictive. This division is likely to influence the Eurozone's economic outlook, especially with European Central Bank President Christine Lagarde set to speak later in the day, although her comments are unlikely to offer new insights on monetary policy. The euro's performance against other major currencies is also notable. The table below shows the percentage change of the euro, against listed major currencies today. The euro was strongest against the New Zealand dollar. The US dollar index, DXY, is pulling back from highs, but downside attempts remain limited due to moderate risk aversion and receding bets on further rate cuts by the Federal Reserve in December. In Europe, the Eurozone ECB Manufacturing PMI figures confirmed the sector's activity improvement, at 50.0, up from September's 49.8 reading. The euro to US dollar pair is currently correcting higher after finding support at the 1.1500 area, coinciding with the US dollar index trading at the 100.00 psychological level. The 4-hour Relative Strength Index, RSI, indicator is negative, but the Moving Average Convergence Divergence, MACD, is about to perform a bullish cross. The pair's recovery seems limited, with the previous support area near 1.1545 challenging bulls. The October 22nd and 23rd lows at 1.1580 are the next target. However, a further decline beyond Tuesday's low near 1.1500 could open the path towards the 261.8% Fibonacci retracement of the late October rally, near 1.1450. This is the measured target of the broken triangle pattern. Risk sentiment is a key factor in the financial markets. The terms risk-on and risk-off describe the level of risk investors are willing to take. In a risk-on market, investors are optimistic and buy risky assets. In a risk-off market, investors are worried and buy less risky assets. Typically, during risk-on periods, stock markets rise, most commodities gain, and currencies of commodity-exporting nations strengthen. During risk-off periods, bonds rise, gold shines, and safe haven currencies like the US dollar, Japanese yen, and Swiss franc benefit.